Hey, Sean McManaman, Mortgages by Sean and CMG Mortgage, and I'm here with your weekly rate update. So the look's a little different this week, so I'm at a different location. Wow, rates, what a roller coaster ride in the last week. Last week we were above 7%, as you remember. And then Friday unemployment report came out, and that showed that unemployment ticked up a little bit, which is good for rates. So rates kind of came down. Then we had this bank failure of SVB Bank, Silicon Valley Bank failing. And we didn't know how the markets were going to open up on Monday, and the stock market got hammered. But the mortgage-backed securities market really did well because money flowed to that. So Monday looked good, and then Tuesday came, and we had core CPI came out and did not show any tick down in inflation, and that was terrible. That day rates went way up. And then Wednesday came and we had PPI, producer price index, and that's the Fed really kind of looks at that a little more than CPI. And the PPI showed core inflation year over year coming down almost a full point. Well, that was good. Rates love that. So what a roller coaster ride we've had this week. And let me share my screen right here. I'm going to show you where rates are. And let's do this real quick. So right now, interest rates, the average 30-year rate is ticked down to 6.69%. We have the FHA rate at 6.2. We have the VA at 6.25. So we're below 7. That's a beautiful thing. We like to see that. And we're just going to have to deal with these fluctuations going forward. It's going to happen. The Federal Reserve meets next Wednesday, and all indications are that they're going to raise by a quarter point. That will not hurt mortgage rates. Actually, that'll be okay. So stay tuned. It's really not so much what they do. The market's already expecting that quarter point raise. It's what they say. That's what's more important. If they say anything indicating they feel inflation is still really strong, that could hurt mortgage rates. So if they think they've got inflation under control, then that could really help mortgage rates. So we're going to see this roller coaster going forward quite a bit. All the experts think that we're going to see rates ticking down towards the end of the year, towards the end of the year. That's not a reason to wait. If you're a buyer, do not wait. Values, I saw the numbers for February. Inventory is still very low. Values are still going up. If you think waiting for lower interest rates is going to be successful for you, that's not, because values are going to continue to go up. So take advantage now while rates are where they're at. You can always refinance. You cannot refinance the value of a home. So if you have any questions whatsoever, feel free to reach out to me. If you need to get pre-approved over the weekend, realtors, reach out to me. I'd be happy to do that. Hope you have a great weekend. Happy St. Patrick's Day. Take care.